Drop it.
Welcome back, passive income investors. I like to. Where are they now? My two favorite utilities, Northland Power and Southern Company. I was making videos on these literally a year ago when I started my channel, and heck, I thought it'd be fun to see if these stocks are still worth buying today. So we're going to do a quick overview, and then I'll give you some opinions at the end of this video. But we're going to start with Northland Power, my largest Canadian holding, worth $15,000, and this stock has been on one heck of a tear, watching the dividend drop drastically to 3.9%. My current yield on cost is 5.14%. And one of the reasons I found this stock so attractive was because of the monthly dividend payments and the fact that they were taking on some really interesting projects. The main reason I found Northland Power so attractive was Germany's quest to achieve 100% renewable energy in the future. They were looking to do this by 2025, getting most of their energy projects to start bringing in natural wind. We got solar bringing in some power, and this was a huge endeavor. And 5 years ago when I first started buying this stock, this was a big highlight considering Tesla wasn't that big of a deal 5 years ago, and renewables were just starting to come into highlight reels of like BNN or CNBC, just started bringing the conversation up. So I figured I could get in on the early grounds, when back in school in the days when they were talking about sustainable energy, and I thought Germany was like the head of the game. But getting right into some of their fundamentals here, the market cap currently sits at $6 billion. The PE is at 18, which back then I think it was trading at, I actually wrote this down, 16.37. So things have changed quite a little bit. And is it justifiable? Well, let's just go into the fundamentals and see what's going on. The first thing I always like to do, utilities usually trade at a higher base value because they tend to take on more leverage, and we can see that by looking at their total assets versus liabilities. They got 10.3 billion in assets, and they got about 8.7 in liabilities. If we minus those out, we're sitting on about a billion and a half of total current assets. And if we minus that out from their market cap, we can see that they're trading at about 6 times. So if they got 1 billion on underlying assets, but they're trading at 6 times that, $6 billion in market cap, that means we're paying a pretty hefty premium for those underlying assets. I usually like companies that trade much closer to their market cap. A company like my sin stocks like MO, BTI trade really close to their underlying assets. It gives me a bit more security and comfort. But taking a look at their earnings, they have beat a lot of earnings through basically 2019, where they pretty much beat all of their earnings up to this point. And I think we're still waiting for Q4 here. But looking at from 2018 on, they've done an incredible job at growing this company, considering in 2015, they were only making 800 million. Their underlying revenues were absolutely brutal. And today we can see that they're a $1 billion revenue generating machine, which is pretty incredible to say the least. What one heck of a growth stock for a utility. And getting into the actual website and taking a look at some of the presentations here, guys, to show you what they're doing, we can see that their current projects that they're functioning that are in operation right now. We got the Netherlands and Germany here doing their offshore wind projects in North Sea. This was the big project I was talking about 5 years ago that finally came into fruition. But man, oh man, have they expanded well beyond this. As we head on over into their investor relations, let's just scroll through so I can show you guys some of the highlight reels here. I don't know how much you are aware of, megawatt power generation, but I wanted to show you just some of the main highlights here, where I can find some of the actual assets. We can see from 2013 on, they went from 3 billion to 10 billion, which is a 28% annual growth rate. Absolutely incredible stuff here, guys. But what I really wanted to show you is some of these underlying fundamentals. You can see their net income has exploded quarter over quarter from 2018 to 2019, like a pretty big upstake of 19%. That's pretty huge for utility. And this is, in perspective, a rather small utility on top of that. So they got some good corporate credit facilities going on here of about $1 billion, corporate debt of about 0.2 billion, which they've utilized. So they are taking on more and more debt, as utilities usually do. So where things get really interesting is the way they've been diversifying their assets and some new facilities they're bringing on to really diversify their global exposure. As we can see in Taiwan here, they're bringing on some facilities, and we got some more coming in South America, which is really, really awesome to see that they are still expanding. The management team is still bringing on new contracts, which means we could see some continued growth in this company. So lots of incredible incredible stuff here. I'm not going to get too into this. I'm going to leave all the links in the description below, but we can see that they still deal with natural gas, but luckily that the majority of their income now comes from mainly wind and solar at this point. As we can see here, guys, these offshore wind projects that they launched in Europe have really been skyrocketing some of their income. But taking a look at their dividends here as well, we can see that the dividend increase hasn't been that drastic. We can see that they don't do them fairly frequently, but they are monthly paying, which is really attractive, and they do have a really stable income setup. So we can see that from the last increase was in 2017 going into 2018, and we haven't seen a dividend increase since, but I think it is likely going forward at some point in the next year or two, considering their payout ratio right now, I think is at about 0.7 times. So I think we could potentially see another dividend increase down the road, considering we've got a lot of new projects coming on, and North Sea is only just starting to pump out cash flow now. So it'll be neat to see where that goes from here. Now, moving into Southern Company is a company I bought, I think, based on a video I watched with PPC Ian when he started talking about it. I did a deep dive, found out that I really liked the company. I started loading the boat pretty much around the beginning of last year. And this video was posted on May 8th of 2019 when I first started talking about Southern Company. And it is not the largest holding. I wish I had a little more of it when I was buying it. I only got my position up to about 4,000, which today is worth 7. So, I mean, we've seen some really nice gains, but I would have liked to bring this to a little more scale back then. In the last year, this company has gone on a tangent, like one heck of a tangent, going from $50 all the way up to 70. And taking a look here, guys, the dividend yield has dropped substantially as well. If we go back into my dividends, we can see Southern Company is paying me out 5.6%, but today it is not anywhere near there. It's almost dropped in half, which makes it a lot less attractive overall. But let's get into the fundamentals and see what's changed here. So we can see the market cap sits at 71 billion. A massive conglomerate when we're talking about, utility companies with a current PE ratio of 15. So it's actually got a lower PE than Northland Power, which could make it a little bit more attractive. But like I said, guys, most utilities traded a lot higher valuations when it comes to that debt to asset ratio, because taking a look, we've got 116 billion in assets with total liabilities of about 87 billion. So we're taking a look at a total asset valuation minus those total assets from liabilities, just guesstimating here about what, 25, maybe $30 billion, and going back in, taking a look at their market cap, trading at a much closer valuation than Northland Power is as well to that underlying assets, because I mean, we're only looking at about 2 to 3 times their underlying assets. And taking a look at their revenue growth, it hasn't been like massive. Mind you, in 2019, the reason the stock jumped so much was because those Q3 earnings just smashed it out of the water. They did an incredible job in 2019 of bringing up their revenues and earnings. And we can take a look here, guys. We don't have 2019's full income, but we can see that, 2017 to 2018 wasn't that big of a difference. We can see that they increased their bottom earnings in the billions, which was a big change, but their top revenues didn't change that much. But getting into the actual company in and of itself, it has been bringing on new projects, which I think we're going to start seeing come into fruition. This company primarily deals with nuclear and the other side of the spectrum, which is why I wanted to buy it. But this company is one of the best rated utilities on the planet, and it is one of the largest utilities trading in the US. But if we head on over into the webcast and presentations as well, let's just zoom in a little. I think we're zoomed in enough. You think you zoom in a little more so you guys can see what's going on here. Just taking a look at some of their base earnings, guys, we can see it has increased substantially from 2018 to 2019. Absolutely incredible earnings per share, considering we've gone from $1.92 to $4.12, which could probably explain the massive run that we've seen with this company, which hopefully is going to lead to some more dividend increases. But what I want to show you is the diversification they have amongst all of their power. So we can see here now, as of 2019, their diversification in power is 16% nuclear, natural gas makes up 50%, and coal makes up 22%. And they've also started touching base and increasing the renewable assets. I know people aren't the biggest fan of nuclear, but I honestly think it's going to be around forever. I don't think it's going anywhere anywhere anytime soon. So I like the fact that I get this really nice diversification, that in my personal portfolio, I have, pretty much half of my portfolio in the utility aspect exposed to natural energy. And then we can see this makes up for more of that nuclear and other natural gas part of the energy sector that I don't have that much exposure to. This is why I'm not really buying any other utilities. I'm very, very happy owning these two utilities and the way they've balanced out my portfolio. Where they go from here, though, is going to be very fascinating. Taking a look at Southern Company's dividend increases, it's a little bit more steady than Northland Power. Mind you, again, Northland Power pays monthly, and I think that's their primary focus, whereas Southern Company is trying to increase, obviously, their cash flows, which leads to higher dividends, which is really nice to see considering this company has done a great job at steadily raising the dividend. Nothing absolutely massive, but then again, we can see that from 2014. I like trying to do 5-year spans. So we can see from the beginning of 2015 here, we're getting about a 0.52%, and to date we're sitting at a 0.62. So we're not seeing a massive dividend increase. And currently where this company trades, I would have a hard time personally buying it because the dividend yield has dropped substantially, considering the average yield this company offers has been around between 4 and 5%, and on the good years it's been trading over 5% where I've been buying it. So I got really, really lucky with this company. But overall, would I consider these stocks a buy today? That is a tough question to answer in my personal opinion, considering, these companies have done an incredible run and they have been doing a good job at increasing revenues. I still think they have some good potential upside to them between these two companies. But do they have the upside they used to have? I don't think they'll get the attraction until they start increasing dividends, because these companies are famous for paying their dividends. And, when you're looking at a dividend yield, for even a forward dividend yield of 3.6% with Southern Company, and a dividend yield looking here for Northland Power of 3.9%. That is just not nearly as attractive as it used to be, guys. What a big change from when I was buying them. I'm pat myself on the back a little bit here for the prices I picked them up at, but there's better deals out there, in my opinion, today, guys. You could definitely find some better stocks. If you want exposure to utilities, at this point, it's hard to say to be patient and wait. You could consider cost averaging in and maybe making small positions, but if I couldn't want to buy them unless they're paying out the yields that I'm getting off them now. So I'm just going to be sitting and enjoying the dividend payments and rediversifying them into other stocks. And I'd love to know what you guys think about these companies in the comment section below. Do you own them? Are you a fan of them? Would you be buying them today? I'd love to know what you think. So drop a comment. Stay cool. Stay awesome, guys. Just a really quick video breaking down my utilities and how much has changed in just a year. But I look forward to chatting to you real soon.